Hello, ladies and gentlemen. Welcome back to another episode of Trading for Life. Happy Sunday, folks. Hope you all had a great weekend after what was a crazy week in the markets. If you didn't know, we've only got 3 more trading days left in April, and so far, we're on track for one of the most bullish monthly candles we've seen. Plus, we've witnessed one of the best April seasonal performances in history. The S&P 500 is now up more than 15%, and that's just incredible. Now the big question, will we see more selling pressure in these final days, or will this monthly candle finish strong and green? With that being said, we have a lot to discuss today. If you love trading like we do, please make sure to like and subscribe. And let's dive right into the news. It's hard to get too excited about stocks despite the recent rally, as tariff uncertainty continues to overshadow upcoming U.S. economic data. While investors will closely watch reports this coming week on jobs, inflation, and GDP, the data will largely be backward-looking, offering little comfort amid growing concerns that President Donald Trump's sweeping tariffs announced on April 2nd could cause future economic damage. "We don't want to take too much risk at the country level," one strategist said, adding that they are avoiding taking big positions by overweighting or underweighting the U.S. compared to the rest of the world. U.S. stocks closed out a strong week on a positive note Friday, but it's the triggering of a rare bullish technical indicator in the previous session that has investors excited. Markets surged earlier in the week after President Donald Trump announced that tariffs on Chinese imports would soon fall from their current 145% level, and reassured that he wasn't considering firing Federal Reserve Chair Jerome Powell. What really energized stock market bulls was the broad participation in the rally. A vast majority of stocks moved higher, enough for Thursday's session to trigger the Zweig-Breadth thrust indicator, a rare bullish signal popularized 4 decades ago by legendary investor and market timer Martin Zweig. Fears of pandemic-era shortages are back, as shipping container traffic from China to the U.S. plunges following President Trump's tariffs. Apollo's chief economist, Torsten Slok, warned of potential empty shelves in a few weeks and risks to trucking and retail jobs. While shortages and higher costs are a concern, many U.S. firms anticipated the tariffs and pulled orders forward, making this situation different from the sudden shortages seen during COVID. Worried about NVIDIA's future sales? Morgan Stanley's Joseph Moore isn't. Despite concerns that AI hardware budgets might slow, Moore said the idea of an AI digestion phase is laughable, citing explosive and durable demand for inference chips. NVIDIA's GPUs are critical for both training and inference in AI models, and demand remains very strong. Now let's expand the conversation and review some data. I want to show you guys. This is interesting. The bull-bear spread in the AII survey has dropped to negative 34 points, near the lowest level since the 2022 bear market low. This marks a decline of over 50 points in just the past few weeks. In the latest survey, 55.6% of respondents were bearish on the next 6 months, while only 21.9% expressed bullish sentiment. However, their asset allocation to stocks has only fallen 3 percentage points to 67%, which is still historically elevated. For perspective, during the 2020 pandemic, stock allocation fell to around 55%. In other words, despite extreme bearishness, individual investors have barely sold any stock. Retail investors remain heavily invested. This has been one of the most volatile years in history. The S&P 500 has seen a 2% move in either direction on 23% of trading days, or at least once a week so far this year. This is the highest reading since 2022, when the share hit 29% for the full year. By comparison, the long-term average has been twice a month. According to Bloomberg, April is on track to be the 3rd most volatile month on record, after October 2008 and March 2020. Volatility is here to stay. The indicator measures NYSE advancing issues as a percentage of advancing and declining issues, smoothed by a 10-day exponential moving average. An alert is triggered when the indicator moves from below 40% to above 61.5% within 10 trading sessions or fewer. A rally similar to 2015's 4.8% maximum gain following a Zweig signal would take the S&P 500 to its 200-day moving average around 5,747. However, the S&P 500 later fell back, experiencing a maximum pullback of more than 9%. The record is impressive, especially when considering 12-month forward gains, which saw the S&P 500 rise in all 10 instances following a Zweig breadth thrust dating back to 1982. However, technical analysts are quick to caution that there's more to consider, and investors may face a bumpy ride, at least in the short term. Now let's review S&P 500 heat map and how Mag 7 stocks doing so far for this year. Microsoft was up 6.54%. Apple was up 6.24%. Amazon and Nvidia were both up more than 9%. Google was up almost 7%, and Meta was up 9.13%. Tesla was up 18%. And so far, most of the sectors were green, as you can see. Let's see what Mag 7 did so far this year. Meta is down minus 6.5%. Microsoft is down minus 7%. Amazon is down minus 13.8%. Alphabet is down minus 14%. Apple is down minus 16.4%. Nvidia is down minus 17.3%. Tesla is down minus 29.4%. Buckle up. Big earnings week coming up. Monday, Domino's. Tuesday, Coca-Cola, Starbucks, Visa, PayPal, UPS, Pfizer. Wednesday, Microsoft, Meta, Robinhood, Qualcomm. Thursday, Apple, Amazon, Eli Lilly, McDonald's, MasterCard. Friday, ExxonMobil, Chevron. Let's expand the conversation and analyze the SPY daily chart while creating a visualization. Here's a corrected and polished version of your statement. The bulls have been in control this month, but the monthly candle's outcome depends on how the market closes over the next 3 days. The monthly candle currently appears bullish. However, the key level for bears is 550. If the price gaps up above this level and holds, the next target for bulls could be 570. Key events this week: 1. JOLTS job openings, Tuesday 2. Consumer confidence, Tuesday 3. ADP payrolls, Wednesday 4. Q1 GDP, Wednesday 5. Core PCE inflation data, Wednesday 6. Microsoft earnings, Wednesday 7. Meta Platforms earnings, Wednesday 8. Initial jobless claims, Thursday 9. ISM manufacturing PMI, Thursday 10. Apple earnings, Thursday 11th. Amazon earnings, Thursday 12th. U.S. jobs report, Friday. All right, folks, that's a wrap for this video. If you enjoyed the content, don't forget to like and subscribe. Got questions or thoughts? Drop them in the comments and I'll respond as soon as possible. Thanks for watching, and I'll catch you in the next one. Take care.